Welcome back to the CLiK Trading Education Weekly Market Review for the weekend in June 12th, 2026. This week we witnessed a selective risk-on environment with tech and small cap stocks taking the lead. Let's dive into what happened in the markets. Starting with equities, the Nasdaq jumped by 2.83%, while the Russell surged an impressive 4.64%. The S&P 500 and the Dow also saw gains, but they were more modest at 0.91% and 0.85% respectively. These gains were driven by investor confidence in the tech sector's future earnings and innovation potential. On the flip side, the commodities market told a different story. Gold dipped by 2.65% and crude oil took a significant hit, plummeting by 8.73%. Energy prices dropping sharply influenced inflation expectations and related sectors, adding a dynamic twist to market movements. Meanwhile, currency markets stayed relatively stable, with the US dollar down slightly by 0.16% and the euro gaining 0.51%. Recent economic data sent mixed signals, affecting investor sentiment and market positioning. Central banks have kept a cautious tone, emphasizing the need for flexibility in policy, which has been crucial for maintaining market stability. The volatility index, VIX, dropped by 12.86%, indicating reduced market fear. In simple terms, this week was all about a selective risk-on sentiment, with tech and small caps thriving even as the energy sector showed weakness. Now, let's talk about the standout moves. Solana outperformed with an 8.63% gain, driven by increased adoption and positive sentiment in the crypto space. The Russell's 4.64% rise was fueled by a rotation into small cap stocks. Tech stocks rallied, with the Nasdaq climbing 2.83% on the back of positive earnings outlooks. However, crude oil's sharp decline highlighted concerns over supply-demand dynamics and inflation. Notably, Apple saw a decline of 5.71% as investors took profits and rotated away from mega-cap tech stocks. From a trader's perspective, diversification is key. As sector rotations occur, they can significantly impact portfolio performance. Staying informed on macroeconomic trends is essential for anticipating market reactions. The volatility in commodities signals potential broader market shifts, so keeping a close eye on these changes could be beneficial. Looking at what moved the markets last week, inflation reports showed mixed results, easing fears slightly and boosting equity gains. Central banks maintained a cautious outlook, which helped support market stability amidst uncertain economic conditions. On the geopolitical front, tensions eased somewhat, with markets responding positively to diplomatic engagements. These factors combine to create a more favourable market sentiment. As we look ahead, it's crucial to remain vigilant. Economic data releases and central bank meetings will continue to be pivotal in shaping market directions. Understanding the broader macroeconomic environment will help traders navigate these shifts more effectively. For our trader takeaway, remember that this content is for educational purposes only and not financial advice. Keep your portfolios diversified and stay informed about macroeconomic trends to position yourself strategically in the market. Thanks for watching. We'll see you next week.